The crypto markets are staging a massive recovery. It may not seem like that based on looking at the price action of Bitcoin over the past 1 month or so, but the fundamentals for Bitcoin, Ethereum, and Coinbase are stronger than they've ever been over the past 24 months. Although the crypto rally of 2023 seems to have come to a small end, there seems to be a lot of developments going on with US regulations, partnerships in the European Union, and even that from ChatGPT's own founder, Sam Altman, around the blockchain industry. Not only is gold's recent rally to almost $2,000 a massive bull signal for Bitcoin, but the recent partnerships announced by Coinbase along with the price action of Bitcoin are signaling that the overall crypto bull market is still very much intact and that right now is not the time to sit on the sidelines. So in this video, I want to give you guys some of that analysis as well as understand why Coinbase particularly is well positioned to benefit from these developments. I'm going to look at the financials and the fundamentals of Coinbase's business and their latest earnings report to understand why the stock is potentially quite undervalued. But as usual guys, before we get into it, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So first things first folks, let's understand where the Bitcoin price action is right now relative to where it has been in the past. As I'm sure you know if you've not been living under a rock, 2022 was a terrible year for cryptocurrency. FTX's collapse in November really signaled the bottom in investor confidence and sentiment, and right now that has officially marked the bottom of the 2020 Bitcoin bear market cycle. And as you can see from this chart, in total we have had around 4 bear market cycles since the inception of Bitcoin in 2009. Every single one of them has had its own ups and downs, and although this looks very different from each to each, there are some similarities in the trends of all 4 of these. Typically, it goes on the order of 4 years since 2012, meaning 2016, 2020, and now 2024 are going to be the halving years for Bitcoin, which is going to make it twice as hard to mine Bitcoin, as a result helping increase and secure its supply. And as you can clearly see, there's been a very consistent trend in these kinds of cycles for Bitcoin. The rally obviously creates a lot of hype, and that is exactly what we saw happen at this time in 2013. But then you get a bear market which shakes out most of the weak hands, results in new regulation around cryptocurrencies, and you have new people investing from the very early stages. That's when a new catalyst emerges. In this case, it was Ethereum launching in July of 2015. And then you have the new bull market evolve going into the halving year of 2016. And well, if you look at where Bitcoin is right now, we are in a very similar trend. Interest rates have been hiked at the fastest level that we have seen in over 40 years. And as you can see, typically when this level peaks is when the Bitcoin bull market starts, just like it did in 2019. There's obviously no guarantees, and this could certainly turn around if the Fed decides to raise rates all the way up to 7 or 8%. But that scenario is realistically very unrealistic because inflation is already starting to come down and the Fed is already expecting a recession at the end of this year. And as you can see, despite the small pullback we've seen in Bitcoin so far, we are still very much in this upward channel, which is still a bull market. And that is obviously going to continue on for now, as long as we don't break this prior low around 25,000. Plus, even if you look at some of the macroeconomic factors that are moving Bitcoin's price, which have been primarily the fallout of SVB, you can see that gold being up to almost 2,000 is actually bullish for Bitcoin. JP Morgan actually says there's a correlation between Bitcoin and gold prices, and right now where gold is, Bitcoin should equivalently be at almost $45,000. However, this is obviously under a very strict assumption that Bitcoin equalizes gold in private investors' portfolios in risk capital or volume adjusted terms. meaning venture capitalists and private firms should actually believe that Bitcoin is the same risk level as gold. And right now, that does not seem to be the case, even though obviously we know things can change very fast in this industry. On top of that, if you go to any social media channel, general sentiment around crypto still seems very negative from most retail investors. We all know that institutional investors tend to be ahead of the game, and that has been clearly witnessed with how good Coinbase's most recent first quarter earnings report actually was. But from retail investors who got involved with all the hype in 2021 with NFTs and everything else, they seem to be still lacking a lot of confidence. And that, for me, is a bullish signal. And at least in the stock market right now, there is no other better bet to make on the crypto recovery than something like Coinbase stock. This business was worth almost $90 billion in the peak of 2021. And although those profitability days are far gone for Coinbase, the valuation right now of $14 billion is still quite attractive. Because, first of all, you see in 2021 on revenues of $7.4 billion, Coinbase printed operating income, which is after any operating and gross expenses, of $3.1 billion. That is almost a 40 to 30% profit margin, which is insane for a company that at that time was growing at over 150% year over year. As you can see, the company back then was then worth around $54 billion at the IPO with a peak of $90 billion. And in 2022, because of the shock interest rate hikes we saw, the company reported net loss of $2.7 billion. But if you look at the most recent report for the first quarter of 2023, Coinbase's annualized revenue falls right in line with 2022, with their operating income being less than 40% of what we saw happen in 2022. This is clearly a sign of massive cost-cutting advantages as well as increasing service and subscription revenues. Believe it or not, from this time last year in 2022, Coinbase's net income is up 81%, with their profit margin up another 71%. And that is on top of their revenue being down, which is obviously driven by price fluctuations in the crypto markets. And that is obviously following massive losses and decreases year over year in the prior quarters. This means, as you can see, Coinbase's quarterly revenue is starting to tick right back up, with Bitcoin pricing not necessarily being up to the levels we saw in early 2022. On top of that, their profit margin is achieving break-even after being at more than negative 135% in the second quarter of 2022. This is a pretty big deal because if Bitcoin prices recover for the rest of the year, that means Coinbase is most likely going to achieve profitability back for 2023. And that right there could significantly shift the way investors value this company, which right now is being undervalued significantly. Because as you can see, back when Coinbase was making a profit in 2021, its PE ratio was sitting anywhere from $17 to $26 for each dollar of EPS, with its price to sales ratio sitting anywhere from $7 to $10. Meanwhile, right now in the latest quarter, Coinbase's price to sales is 4.77, almost 50% below where it was back then. And this is with increasing subscription and services revenue, which arguably is higher margin than trading and also diversifies Coinbase's revenue streams. Interest income for Coinbase grew to almost $241 million in the first quarter from their USDC investment, which means as long as interest rates remain high, they are still going to get interest income, which is basically 100% margin revenue. On top of that, they just announced their new EU partnership with Bitpanda, where they're going to be able to license the technology that Bitpanda provides to some of the biggest banks in the EU, enabling Coinbase to sell its own institutional services to new customers. Like I've said countless times in the past, the SEC has no idea what they're doing with crypto. In my opinion, they are purposefully delaying their approval of regulation around this industry for the 2024 election year. And once that does happen, Coinbase is going to have the leading edge, with it being the most trusted exchange on earth right now. This, paired with the trends we're seeing in Bitcoin, is one of the reasons why I'm very optimistic around this space for 2023 and 2024. But as usual, guys, that is just my take on the situation. Let me know your thoughts down in the comments below on the situation, and I'll catch you guys in the next one. Take care.